If you can identify order blocks, but you keep taking loss after loss, stop. Not every order block deserves your money, and you're likely trading the garbage setups everyone else is chasing. I've been trading for almost 38 years, and the biggest shift in becoming profitable came when I stopped treating order blocks like they're all created equal. They're not. So in this video, I'm breaking down the framework that changed how I select my trades and 3 filters that separate winners from losers. So let's get into it. So what actually is an order block? Imagine a parking garage full of Lambos. That's basically what an order block is, except instead of supercars, it's millions of dollars in institutional orders parked at specific price level. When price comes back to test those zones, those orders activate. It's like a spring that's been compressed, and once price touches it, you get the reaction. But here's the thing. Anyone can draw a box on a chart, but knowing which order block actually has institutional money behind it, that's what makes you profitable. So let me explain. There are only 3 elements to look for. First one, look for the aggressive move. This is a candle with a long body and minimal wicks. It's a sharp, one-sided move, like institutional money just kicked a door open instead of gently pushing it. It's a violent shift, and that's your first clue. Then, element 2 is the sell to buy candle. This is the last down candle right before that explosive move up. Think of it as the calm before the storm. Price dips one final time, and then boom, institutions push it aggressively higher. For a lot of traders, it looks like a failed momentum setup. For a bearish order block, it's the reverse. The last up candle before the aggressive move down, suckering in those momentum chasing buyers. After that, element 3 is the fair value gap. Remember, if you've watched previous videos, you know these are often also known as 3 soldiers or 3 crows from candlestick analysis. When institutions move fast, they leave empty space behind, like skipping steps on a staircase. Here's what to look for. The wick of the first candle and the wick of the third candle should not touch. That space in between is the fair value gap. And listen, price always wants to fill that gap, almost like a magnet. For bearish setups, it's the same thing, just reversed. If you're getting value from this, hit that subscribe button. I drop new trading strategies every week that actually move the needle in your trading. All right, but hear me out, because finding an order block does not mean you should trade it, because most of them are traps. And the real edge will come from knowing which order block works from the ones that destroy accounts. To do this, we're going to use 3 filters. Filter number 1, always trade with the trend. And I mean always. Zoom out. Look at the market structure on the time frame you're trading. If you're trading the daily, the 4-hour, or the 30, look at the structure on that chart to identify the direction. Remember, each time frame is its own slice of psychology. You need to see that price is making higher highs and higher lows. The higher lows are the backbone of the move if you're looking for buys, or lower highs and lower lows if you're looking for sells. Once again, those lower highs are the backbone of the move lower. Once you know the trend, that market structure, you only take order blocks that align with that trend. The reason is simple. Counter trend setups work less than 35% of the time. You're fighting institutions with deeper pockets than you. The trend is the wind. Move with it. Moving on to filter number 2. Never trade the first order block you see. Think of it like this. As price moves, traders place stops just above the highs or below the lows. These are typical momentum places. And here's what institutions do with that. They make price poke through those levels, activating all those orders. That burst of triggered orders creates the volume they need to push price in their intended direction. So don't trade the first order block. Instead, trade the one after the sweep. That's where the fuel is. Now for the final filter. The order block must relate to a structure break. There has to be a break of structure in that move, meaning it pushed price to a new high or a new low. Remember, that's where most retail traders are placing their orders. If price pulls back and makes a different break in structure in the other direction, well, that order block is now invalid. Now, listen to this. After you validated all three filters, this is what you need to do to enter a trade. Always wait for price to reach your zone. Then wait for confirmation on that time frame where you've already found the structure. It could be a structure shift in your direction or a rejection candle showing institutions are defending that level. This is how you get your stops and how you avoid getting chopped out at that zone's edge. So let me quickly recap the order block strategy step by step. Step 1, identify the direction of the setup time frame. Step number 2, find your order block. This is going to be that point of interest. And step number 3, wait for the price to reach that zone. No trigger, no trade. Step 4, wait for your precise entry. Maybe it's a candlestick pattern. Maybe it's a filter such as a moving average or a slow stochastic. Step 5, confirm the trend is now aligned with your bias. The trend must still be intact. And step 6, enter when structure shifts in your direction. A great confirmation could be a minor high or minor low pattern. It could be an inside candle. Now you understand that filtering beats volume alone. When you align with the trend, when you wait for the liquidity grab, and when you wait to execute with precision in your predetermined zones, trading these stops feels like guesswork, and now it becomes predictable. But here's the reality. I can't fix your specific mistakes in one video, but hopefully you've taken a big leap towards that. But this is also why I've created my live trading community where I teach everything from setups to execution and coach you on your decision making and your risk management, as well as position sizing, so you can reach profitability. That's the goal. After 38 years as a trader, I can instantly recognize failing setups. My role is to sharpen your judgment so you can too. It's not magic. If you're done bleeding on bad order blocks and ready to take trades with real selectivity, a watch list, a process, check the details below. Let's make you consistently profitable. It is possible. The goal, after all, is consistent account growth.